expense of $80. Do I have any cash flow?
No.
No, nothing in cash. It's just an entry. Okay. Recognize insurance expense for 10 months. Back in transaction 4, we paid $360 for a year policy. It started March 1. We've used all of March, April, May, June, July, August, September, October, November, December. 10/12 of $300, right? So I need to subtract from my prepaid insurance $300, right? Keep it in balance. I'm gonna have $300 worth of expenses. I'm gonna have insurance expense of $300. I have no cash flow because it's an adjusted entry, right? I said, don't get bogged down on formulas. I use 10 months of 360, right? 360 divided by 12 times 10. Okay. Last transaction, recognized income earned on the service contract described in event number 9. So in event number 9, we collected $2,800 cash in advance. We're gonna provide services to the client for 1 year. We did that November 1. How much did we earn? 2 months, 2/12, right? So my liability is gonna go down. Minus 480. Claims exchange, the liability goes down and now becomes recognized revenue. Recognized revenue increases retained earnings. I do have consultant revenue, but I do not have any cash flows, correct? I already had my summations in the spreadsheet template, so they're all summed. I have my numbers. All right, we're gonna do financial statements quickly in 6 minutes. The income statement is already right here, is it not? My revenue is equal to $3,280. My operating expenses is equal to $1,750. My supply expense is $80, and my insurance expense is $300. My total expenses, $2,130. My net income is my revenue minus my expenses. We went over the basic financial statements today, and that's the income statement. Revenue minus expenses. Yes? Net income is $1,150. Okay? Next, we're going to do our statement of changes in stockholders' equity. We're going to need that complete in order to do the balance sheet, because we need the equity numbers. How much beginning stock did we have outstanding started this month?
300.
0. It was a brand new company, right?
Correct.
So we had 0. Did we issue some stock during the period?
300, yeah.
Yes. How much did we issue? It
think
was
it
the very
was
first
300.
transaction.
Oh,
We
okay.
started with $3,000 in stock, did we not? We had 0 in the beginning, plus what we issued in the current period equals the ending. So what do we have? We have the 300. Okay, so just sum those two lines.
3,000.
3,000. I'm sorry. Retained earnings. Did we have any beginning retained earnings? No, it's a new company. Plus our net income. Net income comes from the income statement. That's the linkage in the financial statements we were talking about in class. Okay? We have to have that number to determine the end in equity, which we're going to need in order for the balance sheet to balance when we do the balance sheet. That's a linkage in the financials right there. We get the $1,150 net income from the income statement, less the dividends, right? And then retained earnings. How much dividends did we pay?
200.
And in retained earnings, $950. Stockholders' equity has two components, contributed capital, earned capital. We simply add them together. The $3,000 in contributed capital and $950 in earned capital, $3,950. Let's do the balance sheet. The cash, 4520, I'm sorry. The accounts receivable, still open, 600. The supplies that we still have on hand is $20. The prepaid insurance is to 60. And we have 2,000 in land we bought as a long-term investment to ultimately build a building on, right? Total assets, $7,200. Liabilities, we have unearned revenue of $2,400, and we have accounts payable of $850. Our total liabilities, $3,250. Common stock, $3,000. Okay. If we did everything right, this retained earnings should equal. We should have a linkage. Oops. What did I get wrong? That 950, you see that 950 right there? You see that linkage?
Yep.
Okay, 950. Total stockholders' equity, combine the contributed capital and earned capital, and total liabilities and equity is the total liabilities plus the total equity, 7,200. The balance sheet balances, total assets equals liabilities and equity, right? Good possibility we're on the right track here. Cash flow statement. Zero class coming in here at 5? Good, okay. Cash receipts from, so now we gotta do the cash flow statement. Operating activities, cash receipts from consultant revenue, we gotta look at all the operating ones and what they are, okay? So, I don't remember the transactions, we gotta go back and look at it. We could have wrote it alongside of there when we did it, but, number 5 was no cash involved. Number 6 is from providing services, 2,200. And we collected some of our receivables as well, 22. So this is equal to the